Can Congress deliver on tax reform before Christmas? Senate Majority Leader Mitch McConnell wants a full vote on the tax bill next week, right after the Thanksgiving break, once senators return from that break. As health care showed, however, getting every Republican on board with the plan is easier said than done. Joining us right now is the author of Think Bigger and Tiger 21 Chairman Michael Sonnenfeldt. Michael, good to see you. Thanks so much for joining us.
Thank you.
So you've got a member organization that the members are allocating capital.
Yes.
How important is this tax package to them?
So I think it's really important in the sense that in our groups across North America, members want to know, number one, are we going to be more competitive? Will the corporate rate come down and supercharge our economy? That's the positive. On the other side, is the deficit going to balloon? And we won't know that till the rates are all in. So it's a kind of balancing act of making us more competitive and not ballooning the deficit.
You just wonder where we are in terms of the valuations. You've got 500 members collectively managing $52 billion in assets. I know that Stephanie Pomboy's coming up, Dagan, and she's going to talk about, I think, as part of her scenario, talking about, what's better, the move in markets, and is it equivalent to what we've seen in terms of earnings growth? Yeah, earnings have been strong. I recognize that. But is the market getting ahead of itself? What do you think your members would say to that?
So I think our members think the markets are largely priced to perfection at this point.
Yeah.
We only have 20% allocated to public equity. The rest is private equity and real estate.
So the tax bill doesn't happen. We ought to expect a pullback, it sounds like. If it does happen, are they thinking markets go higher, or the price to perfection assumes a great tax bill?
Yeah. One of the things that we've been thinking about is how strong the American economy is under our energy complex, our transportation. We have such great fundamentals that it's hard to tease out what part of the exuberant market is the tax bill and what part is recognizing the amazing competitive advantages we have globally. Businesses coming back to the United States. Our members are entrepreneurs, and they're seeing this kind of growth from low energy costs, cheap transportation, and a rule of law, which is no small thing.
And you spoke about your members.
Yes.
In your book, you said a bigger determination of success is not intelligence, it's actually grit and determination.
Right.
How is that impacting these investing decisions that they're making?
So, members look at businesses like they had their own individual businesses. And the thing that we were talking about is grit beats intelligence. You have to have companies that can go the distance, that keep charging forward. Even today with our allocations, our top 4 allocations are Alphabet, Apple, Amazon. These have entrenched franchises that have momentum that are just going to keep going, and they called it right. Our members have been top 4 stocks are all part of the tech rally, 67 highs this year. Amazing.
Yeah. And you reduced your real estate exposure this last quarter.
Just
why?
Very little. I think it was a 32, 31% kind of number. It's still our largest allocation. And the reason is many of our members made their wealth in real estate, and what they want to do is be able to touch it, see it, feel it. And when markets are so high, they want to be able to make a difference so they can own a piece of real estate and be the first to know of a problem and the first to fix it.
But when prices start declining, you can't sell it. That's the problem with an illiquid asset like real estate. I wanted to point out, because you mentioned the top holdings, Apple, Alphabet. Is it detrimental that we haven't heard more from those CEOs and those executives about the need for tax reform here in this country, particularly lately, as it's crunch time in the Senate? If these major corporate executives were putting pressure on the Senate, would that help? And why aren't we hearing more out of them?
I think we're not hearing more because they have established franchises, so keeping them going the way it is, they don't need the help of further taxes to continue their momentum. They are, Amazon puts a supermarket and a shopping center on every desk. Apple connects everybody. Facebook, 2 billion people. They want the good times to keep rolling, and they're having great times. What a great year all of those companies
Because they're parking their intellectual property in places like Jersey where they don't pay any tax on it, right? Well, which is something the Wall Street Journal has written about.
Yeah, and I mean, just from a marketing perspective, I know the president would like them selling it a little more, maybe talking to their customers. I think that could be helpful. But, yeah, I'm not sure the CEO of the company is necessarily the best pitch man for a tax cut, which is really aimed at everybody. But I think what's interesting is, some people at the high end have been kind of disappointed that there's not, on the individual side, a big tax cut they were hoping for high net worth individuals, or I should say high income earners.
Yeah,
but
especially on the coast. You know, you have the
right.
the blue states, California, New York. State and local taxes are going to be a real hit.
It'll be a tax increase.
Yeah,
but
you got that $650 billion family credit going.
Yeah.
Okay, but it sounds like that is not dampening their enthusiasm. They're looking at that corporate rate cut and saying, this is good for America. We're going to get more growth out of it. We're going to get more competitive.
Yeah. You know, one area of concern is if we eliminate the tax deductibility of student debt. Students are graduating with these mountains of debt, and entrepreneurial activity is low. It could be a lot higher. The last thing you want to do is take away the tax deductibility of student debts, because it makes it harder for young people to take on risk. That's why today 25 to 30-year-olds have an all-time low new entrepreneurial formation. We want to get that up to create the great working class and middle class jobs that are hurting right now.
I wonder how this tax plan is going to pan out at the end. I mean, they're going to go to conference in a couple of weeks, and they're going to compare both plans, the House and Senate. You wonder if that state and local deduction stays in the way it is right now. What do you think?
I think it's going away.
You think it's going away?
Maybe some version of the House thing where you get a partial credit on your property taxes, but there's just not a constituency, and the natural champions for this are all Democrats in the Senate from blue states who will not engage, who will not negotiate.
Yeah.
So they're going to get nothing.
I like how they're standing, Schumer and Pelosi are standing up for the highest income earners in their progressive states, because those are the very individuals who are going to get actually hurt by the removal of the state and local tax
I do think there's another side of it, though. When you eliminate the tax deductibility of state and local taxes, one of the big hits is going to be to educational institutions and charitable institutions, because the dollars are going to move from one place to another.
Yeah, because people will leave.
I don't know. It is good news. You see already in my beloved adopted home state of New Jersey, the state Senate president, Democrat, saying maybe
he's rethinking it.
Yeah, maybe we shouldn't go with a big new millionaires tax. This is exactly what you would hope would happen when you stop subsidizing high taxes.
That's why it's probably the right thing to do. I mean, at the end of the day, it's probably the right thing to do. You need to put pressure on these governors and these local, lawmakers to lower taxes and pull in their spending. Having said that, I'll reiterate it, the top 10% pay 70% of the taxes, so are we cutting taxes on the people who actually pay taxes?
Well, I would hope this is a 2019 project, is to do something more aggressive on the individual side, because it is a problem. In these states, I was hearing from a CEO yesterday saying, where's the incentive for guys like me to keep working? And you want everybody engaged.
That's some of the talk coming out of Washington, is focus on what we're doing on the corporate side. We want to create jobs. Don't worry about the individual side. There's more to come. That's some of the chatter that you're starting to hear.
Part of it is that we have a debate among our members. If the dollars were going to the middle class, they'll get into the economy faster. So they both have different impacts, but if the dollars are going to the wealthiest Americans and there's not a real tax cut to the middle class, it may not be as stimulative. And we want jobs and we want buying it as well. So
nobody's arguing that the tax cuts shouldn't go to the middle class. They absolutely should. That's right. Let me ask you, your members, do they like international right now? Europe and emerging markets?
Number one area they're interested in is 60% of our members say they're looking internationally. And in that top list of technology winners, you had 3 Chinese tech companies that are just right up there with Facebook, 500 billion market cap.
We're hearing that increasingly. Michael, good to talk with you.
Thank you.
Thanks so much. Michael Sonnenfeldt joining us there.